So hello everyone, welcome to one of our professional development sessions. I'm a new member of FinPro and my name's Simone Wicks. For those that don't know me, I'm the Manager of Financial and Corporate Planning at Frankston. Just a reminder, if we could all mute our mics, we know the drill. And as we go through, if you have any questions, we're going to try and wait till the end of the presentation to have questions. But if you could put your hand up or pop some questions in the chat, and we'll be monitoring that. I also have my fellow FinPro exec member here, Chen. Wave, Chen, CFO at Yarra. So yeah, we'll be here to sort of steer the conversation today. We were intending to have Martin Thompson from Crow. However, he's a late apology, so we may not be able to cover the cyber vulnerability aspect of our presentation today. We will be focusing mainly on GST. However, Martin's assured us that he will get some information to Gab and she will send it out under a separate cover. So the cyber aspect of the presentation today was really around the self-assessment process that Crow have developed, and they would provide that to us free of charge. And it's basically for non-technical operators. So it should assist us with our cybercrime security risks and risk assessment. So we'll look forward to that. However, we are lucky enough to have Katarina here from Crow to talk all things GST. She has over 20 years experience in providing domestic and international indirect tax consulting services to government entities and multinational companies. So a lot of tax nerd stuff, I imagine, Katarina.
Yeah, I am a bit of a tax nerd.
But obviously for us, you know, GST is something that we've kind of set and forgot about. I feel like as a industry, we reviewed it. It's actually been with us for over 20 years. So, but we sort of don't review it on a regular basis. So it's an important time to just check back in to make sure that we're covering ourselves and that we're not exposed to potentially any future tax obligations where we're not collecting GST. So, so I might just hand over to Katarina to get started with her presentation. And you want me to stop sharing?
I will stop sharing. I'll kick you out.
Yeah, kick me out.
And hopefully, just bear with me for a tick. It's covering up my screen.
There you go.
I move this. Oh dear. I can see all our pictures and I can't actually slide across to get the slide up properly. Maybe I would do that. No. Sorry, Gab. When I said I need, oh, here we go. Some assistance. I really might actually need it.
Yeah, it's good now.
Okay.
I can see it now. We're
Fantastic.
right to go.
Thanks so much, Simone, for the introduction. Just in terms of the agenda today from a GST perspective, actually selected a couple of areas to focus on, only because I could probably talk on one topic for hours and hours, and we clearly don't have hours and hours today. So the areas that we've selected, a couple of areas that I've been finding in recent times are areas that have probably been ignored a little, but I think they're really important areas. So those are fees and charges that are being charged by councils, as well as grants that are being provided. I'm also going to hopefully have some time to receive some questions and answer some questions. Now, just for completeness, as I'm required by Crow, just to put up a disclaimer and actually say what we're saying today is actually not advice, but happy to pick up anything and discuss in more detail around whether there might be any advice required in the future. Okay, GST and fees and charges. So fees and charges by government-related entities are actually covered by Division 81 in the GST Act. So up until 30 June, so from 1 July 2000 to 30 June 2011, the legislation actually was really prescriptive. Now, it wasn't very detailed, but all it said is a fee and charge is subject to GST unless it is actually included in the Treasurer determination. So what do I mean when I say subject to GST? It's taxable, but there's certain requirements that need to be met in order for such a supply to be taxable. So it's going to be made for consideration, and that means monetary and or non-monetary payment. Further, the supply must be made in the course or furtherance of an enterprise that is being carried on, and a council is seen to be carrying on an enterprise. The supply must also be connected with the indirect tax zone. Now that broadly means Australia for our purposes, and the supplier must be registered or required to be registered for GST. If those 4 requirements are met, and then the supply is not what we call GST free or input tax, which are different categories in the GST law, which effectively say there's no GST to be charged for different reasons, but no GST to be charged, then the supply is taxable at the rate of 10%. It also needs to get reported on the business activity statement at labels G1, which is for total sales, and label 1A, which is GST on sales. For the government organisations that had their fees and charges specifically exempt, and they were listed in the Treasurer determination, you could actually go on and actually look at that determination to see whether your fee or charge is actually listed there. Now, that is still possible, but as I'll go on to say, it's not updated. It used to be updated every 6 months. So what happened from 1 July 2011? Well, the law was completely rewritten. And when I say the law, I mean Division 81 in the GST Act. So going from a prescriptive approach to a principles approach. So basically outlining the areas or the fees and charges in broad that would actually be exempt under that particular division. So there are essentially 3 categories of fees and charges under the new revised law. We'll go through each of these, but just at a high level. The first one is around certain fees and charges that are not consideration, so not payment for any supply. The second category is prescribed fees and charges that are treated as consideration. And the third category is other prescribed fees and charges that are not treated as consideration. And as I touched on before, consideration can be monetary and or non-monetary payment, and that covers a whole heap of things as well. So we'll touch on those as well as we go today. In terms of the Treasurer's determination, the last update was made in 2011, but the Commission of Taxation has said that if you've relied on that determination, then your fees and charges essentially could be exempt up until 30 June 2013. And there were conditions in respect of that, but just as a broad statement, there were a couple of extra years on which you could rely on that determination. Now, as the councils are the ones that are actually receiving the fees and charges, they're essentially making a supply to another party, and therefore under the GST law, they are the ones that are responsible for confirming the GST treatment of the fees and charges. So going on to that first category of fees and charges, being fees and charges that are not consideration, that is, they're not payment. The law specifically says fees or charges of a kind that relate to permission, exemption, authority, or license, or fees or charges of a kind that relate to an application for permission, exemption, authority, or license, and not payment. And if they're not payment, or not consideration, sorry, I should say, then they can't be subject to GST because the requirements for a taxable supply in the GST law are not satisfied. Some examples there could be, for example, compulsory testing or inspection fees that are required for regulatory purposes, perhaps permits for restaurants to occupy the footpath, a license for an event to close a road or roads. Now, the law talks about fees or charges of a kind. The law doesn't define of a kind, but the terminology of a kind is used in a number of divisions of the law, even completely different ones. So the onus is on the council to prove that it is of a kind, that fee is of a kind that meets the requirements in the law to not constitute consideration, and therefore for the supply not to be subject to GST. The second category under this banner is fees or charges of a kind relating to recording, copying, modifying, accessing, receiving, processing, or searching for information. Again, massive emphasis on the words of a kind. Really important to be able to support or convince the Commissioner of Taxation, if you have to, that that of a kind requirement is actually met. Now, usually the of a kind requirement won't be met if we're talking about something that is a commercial sale. So for fees and charges that fall under this category, they're outside the scope of the GST. There's no GST applicable. These are not actually reportable on your BASs. I've seen a number of government organisations, and not confined just to councils, where these fees and charges have actually been reported on their BASs, and they're unnecessarily inflating their sales on the BAS. The second category of fees and charges listed in the legislation are treated as consideration. So if all of the requirements for a taxable supply for GST purposes are met in respect of these fees and charges, then GST will apply. Now, the law talks about the fee or charge being of a kind, again, that terminology, prescribed by the regulations, being the GST regulations. In this particular category of fees and charges, the fees and charges must actually be listed in the GST regulations to actually be considered consideration, and therefore for GST to apply if all of the other requirements for a taxable supply are met. Just a few examples around the types of fees and charges that would fall under this category. A fee for parking a motor vehicle in a ticketed or metered parking space, or a fee for hire or use of a facility, or perhaps for entering a facility. A fee for the use of a waste disposal facility could also fall under this category. So all these fees and charges, if they're listed in the GST regulations, they are within the scope of the GST and are taxable if all the requirements for a taxable supply are met. And just as a quick reminder, a supply is taxable if it is made for consideration, being monetary and or non-monetary consideration, if it's made in the course of furtherance of an enterprise carried on, and a council would be carrying on an enterprise, if the supply is connected with indirect tax zone, which is essentially Australia, if the supply is GST registered or required to be registered, and the supply is not GST free or input tax. The third category of fees and charges covered in the law is other prescribed fees and charges that are not consideration. So again, these must be listed in the GST regulations in order to be prescribed fees. And examples here would include curbside waste collection, or the supply, exchange or removal of bins used in connection with curbside waste collection. There's a few other categories there, but I think the more relevant ones in respect of councils around the waste collection, the curbside waste collection, and the bins, supplying, exchanging or removing those bins. These fees and charges, because they're not consideration, the councils can't be meeting the requirements for a taxable supply being made in connection with these, and therefore these fees and charges are outside the scope of the GST. Because they're outside the scope of the GST, they're also not reportable on BASs. Now, just around risk minimisation from a GST perspective. GST is a self-assessment system, and the council, as the responsibility, as the supplier, has responsibility for confirming whether or not GST applies to the fees and charges that are being imposed. Now, I have mentioned that there have been substantial changes to the GST law that took effect from 1 July 2011. I might just throw there to a bit of a poll. Who has actually reviewed their fees and charges in recent years? And certainly post 2011. I'll keep that to one side and I'll keep talking, and then perhaps towards the end of this, when I get to the end of the slide, we might actually touch on that as well. So if your council has not actually reviewed its fees and charges, I think it's good to actually do that. I'm actually quite surprised with what I'm finding, not just with councils, but also with other government entities that have fees and charges that do fall under these same provisions in the GST law. I had one example last week, and this organisation will remain nameless, of course, but they said to me that they last reviewed their fees and charges in 2008, which is well before the changes to the GST law. Further, they also have not actually documented the review that they undertook. So I think it's really important to review fees and charges periodically. Where there is uncertainty around the treatment to be applied, there's obviously an ability to seek advice to confirm the treatment. And if the treatment is still unclear, there is also an ability to obtain a private ruling from the Commission of Taxation. Because there's so many different fees and charges, and obviously a lot of individuals and businesses that would get charged these fees and charges, consideration should also be given to whether it might be appropriate to map specific fees and charges to your chart of accounts. That's something that usually helps organisations with ensuring they apply the correct GST treatment, but I guess that would also mean that things would need to get processed to the right accounts in order to ensure that that actually happens. Another way, I guess, to keep on top of the GST treatment for fees and charges is to ensure that every time you have a new fee or charge being introduced, to consider the GST treatment. And in respect of existing fees and charges, to actually perhaps review every time you go through your annual budget process. Don't just set and forget. Really, really important, because the GST law changes. The Commissioner's interpretation of the GST law can also change on a fairly regular basis as well. In terms of governance and risk management, people have access to that policy. Don't just keep it, as we used to say in the old days, on the shelf just in case the tax office comes knocking on your door. It needs to be a document that is accessed and can be accessed by everyone that needs to do that, and is regularly updated for any changes. Now, I guess, speaking of the ATO is currently in the process of undertaking a lot of reviews and audits. Whilst not necessarily of councils, their real focus at the moment is on governance and risk management, more so than ever before, and they have hired a lot of people to actually undertake these reviews, many of whom are in the GST space. So if the tax office is undertaking a review, they will ask for policy documents, and if you don't have a policy document, they will consider you really of high risk. So it's something really easy to do, to have that policy documented. And not only does it help with ensuring the correct GST treatment is being applied, it's also something that you can produce to show the tax office that you're serious about getting your tax position right. Now, I can actually see the poll results here. So, how long has it been since your council has reviewed the GST treatment of your fees and charges? The answers say in the last year, 13%. In the last 2 to 5 years, 50%. In the last 6 to 10 years, 6%, and unsure. So great for those that have reviewed in the last year, and even those in the last 2 to 5 years. Now, if it's been 5 years since you last reviewed, I think it's worthwhile having another look at them. But if it's been longer than that, or if you're not sure, I think it's really important to actually look into that, because you want to be getting the treatment right. If you're not charging GST but should be, you could have that historical exposure and obviously the go forward exposure as well, and probably won't be able to recover the GST down the track. So it's good to get that right up front. And in the unlikely situation that you are charging GST but shouldn't, you can either reduce your fees or charges, or actually have more money in your account, so to speak, to actually use for other purposes. Great. Can we perhaps stop sharing those results? And I'll move on to the next slide. Oh, I can actually close that, sorry. Bear with me for a tick. Okay. No, what have I done? Okay, GST and grants. What I've done, oh, hang on. Oh dear, I'm missing a couple of pages. I deleted it there. Okay, so apologies for that. What I will do is talk through those, and I guess we can share those couple of slides that I think I've actually missed after this presentation. So the first question that I want to see asked is the grant recipient registered or required to be registered for GST purposes? If the recipient of a grant is not GST registered, on the face of it, the supply is outside the scope of the GST, because the supplier, which in this case would be the entity receiving the grant, would not meet the requirements for a taxable supply to be made, because they're not registered or required to be registered. However, I think consideration does need to be given to whether or not the grant recipient might trigger a requirement to register for GST by agreeing to do certain things in order to receive the grant. So if we're to say that the grant recipient is not registered or required to be registered for GST, there's no GST implications, you don't have to worry about GST. However, if they are actually registered or required to be registered for GST, then there's a few other questions that need to be considered. So the second question then would be, is the payment being made to a government-related entity? If it is being made to a government-related entity, then there will be further considerations that need to be considered in order to confirm the GST treatment. Not intending to cover those today, but one of the important ones is the payment covered by an appropriation? If it is, it's not subject to GST. Sometimes it's unclear as to whether something is covered by an appropriation or not, and it does require a certain amount of tracing and an ability to prove or support that the appropriation covers the particular payment. We could probably even do a whole session on that because it is quite interesting. Another area that would need to be considered further is if there's related party transactions. Don't just assume that they're excluded from the GST net. Consider the GST implications of those if you have any. So if we're to say that the payment is not being made to a government entity, then we continue on. Moving on to question number 3. So question number 3 is around whether the payment is voluntarily made with no expectation of a benefit to the payer, being the council, in return. So when you're making a payment, do you expect to receive something in return? The something in return, being consideration for our purposes, can include any payment or any act in forbearance or any act to refrain from something, or in connection with a supply or an inducement of the supply. The definition of consideration is very, very broad. And as I mentioned before, it can include monetary and or non-monetary consideration. If the council provides funding to an entity and no material benefit or advantage is received in return by the council, the supply is not for consideration and is outside the scope of the GST, as this would essentially be a donation for our purposes. Further, if there's a gift being made to a non-profit body, that is not the provision of consideration for the purposes of the GST law and is not subject to GST. So if what we're saying is the payment is made voluntarily, it's not subject to GST, it's outside the GST net, you don't have to worry about GST. However, if the payment is not voluntarily being made by the council to the other entity, then consideration needs to be given to the next question. Is there a supply to the council from the recipient of the grant? Now, the definition of supply is very broad, as is the definition of consideration, and includes any supply whatsoever that may be made. It also includes, I guess, agreeing not to do something. So if you're agreeing not to do something, that is a supply for GST purposes. And that could be being made by the recipient of the grant to the council. If there's nothing being provided by the entity receiving the grant to the council, then there's no need to actually worry about GST because GST doesn't apply. If there is a supply being provided by the recipient to the council, then need to go on to the next question. Is there a sufficient nexus between the grant payment and the supply? That sufficient nexus or connection needs to be, a close connection in order for GST to essentially be triggered. So for a grant to be deemed consideration for a supply, the payment must be made in connection with, in response to, or for the inducement of a supply. Examples of this could include a payment to obtain a right that is a material benefit, or a payment for providing advice and information, or possibly even a payment for the entry into an obligation to do or refrain from doing something. As a further example, sufficient nexus may exist where the recipient is required to hold an event under a legally binding agreement, which includes milestones, requirements that the grant be used in accordance with the agreement, as well as particular conditions that also need to be satisfied. Given the above, it's really important to consider each grant on a case-by-case basis in order to confirm what needs to be undertaken from a GST perspective. Having said the above, there's some things that may be considered to be supplied by a payee or a grantee that are seen to be merely incidental or have an insufficient nexus with the payment of the grant. They can include, for example, merely acknowledging the payment, submitting an application for the payment, agreeing to repay an amount that is not spent for the purpose that's been provided for, or providing a report to the payer of the council about how the monies were spent. So if we go back to our question, is there a sufficient nexus between the grant payment and the supply? If we don't have that clear sufficient nexus, then GST cannot possibly apply. But if we do have that sufficient nexus, then the GST is going to apply, assuming all other requirements for a taxable supply are met. Now, technically, it's not the council's responsibility to confirm the GST treatment, but it's really important for the council as well, because if a payment's being made that includes essentially a GST component, you want to be in a position to actually be able to claim back that GST, and to do that, you need to be getting a tax invoice. Otherwise, you can't claim that GST through your BAS. So those are the 5 questions that I would consider in order to confirm whether or not GST should be applied in respect of a grant. A little bit about GST risk minimization then. As I said earlier, GST is a self-assessment system. Technically, it is the grantee that has the responsibility for confirming the GST treatment, but they may not have the expertise or the resources. Sometimes they may also think that, well, we're not GST registered, we don't have to worry about GST. However, what they are agreeing to do in order to receive that grant may actually push them over that requirement to be GST registered. So if they're a not-for-profit body, the GST registration threshold is $150,000. Otherwise, it's $75,000. Depending on the value of the grants that we're talking about, there may be a requirement for the grantee to register for GST. If the treatment's uncertain or based on your knowledge and expertise, you can't confirm whether or not GST will apply, there is an ability to seek advice from an advisor that will be able to guide you in the appropriate direction. If the treatment, in the unusual situation that the treatment is not actually clear, and I think usually an advisor will be able to give you a firm position on these, but if for whatever reason they're not able to do that, or if the grant is really material or potentially controversial, there is an ability to apply for private ruling from the Commissioner of Taxation. In terms of putting grants through your system, I'll throw out there whether you want to actually map the different grants to your chart of accounts and whether that's appropriate to do. Obviously, you'd need to review the different types of grants and classify these accordingly for GST purposes if that is in fact appropriate. In terms of looking at the GST treatment of grants, usually I'd expect councils to be receiving grants, and therefore that's obviously been the focus of my presentation today. But what I would say as a general comment is, whether it's a revenue stream item or an expense stream item, really need to confirm the GST treatment in respect of each particular grant, and make sure that that is correct and not just look at things at an overall perspective. I have had a look at certain grants being provided by a government department that actually provides a wide range of grants to different types of organisations, whether they be not-for-profits, government entities, commercial entities, and was really quite surprised at the approach that they were taking and the fact that it wasn't properly documented. It is now, because we've given advice around that, but I guess you can never do too much, in my mind, to ensure that you get the GST treatment right. We've talked about governance and risk management in respect of fees and charges. The same applies in respect of grants. Add those to your list of items that you review from a GST perspective, add them into your policy and procedure documents. and make sure you're getting it right. Don't have that risk there because it may pop up down the track and as part of a review and audit, and you might not have the opportunity or be able to recover any GST if there is a GST liability in respect of that. I've left a bit of time for some questions, if there are any.
Thanks, Katarina. That was very informative, and I think the poll was quite telling that we don't review our GST obligations often enough, and that some, I guess, didn't know when their GST had been reviewed. I think Chen has a question to start off with.
Okay. Yeah.
I actually got 2 questions now after the presentation.
Great.
Maybe, sorry, before you go, Chen, maybe Katarina, if you stop sharing, we can see people's faces, or when they put up their hands, we might be able to see that better.
Perfect.
So the first question is, on behalf of those 13% of people who don't really know whether we have reviewed the GST or not. So is there any area of fees and charges that we know that has changed because of the new legislation? So we know that we should go check permit fees before it should be GST, now it's no GST. Any shortcut we can take just to put some small area?
You did say earlier to me, didn't you, Chen, that with limited time, you obviously need, what approach do I take? Well, I think the shortcut would be, if I take it that way, is look at what is actually listed in the GST regulations in terms of what constitutes consideration and what doesn't constitute consideration. And then if it's specifically listed there, whether or not it's subject to GST. If it's not listed there, then you certainly need to do a bit of work.
It's a good starting point.
Looking at the GST regulations and what's specifically listed, because they are the ones that now actually list fees and charges that are subject to GST and those that are not.
Okay, yep, thanks. That's a good starting point where we can start the work. The second question is, I guess whether I can make assumption when there was one slide that mentioned about the benefit, whether the supply is to the benefit of the council, and I can assume that that means also include benefit to the community. So, for example, give grant to a organization that educates residents or business to switch to solar panel, for example. So it's not benefit to the council per se, but it's benefit to the community. I can't assume it's same theory.
Yeah, that's an interesting one. I'd with that one, I'd actually want to start with what exactly have you agreed, and I guess is the benefit to the community something that the council has an obligation to provide, given what it's set up to do?
Well, that's very arguable in that. I mean, the Green Party will say it's definitely what we need to do, but probably not some other purpose.
Yeah. So again, I guess, is it a material benefit to the council?
So that's some subjective assessment there.
So it might be, in that case, worthwhile having a bit of a closer look at any guidance that might be available from the Commissioner of Taxation. Now, it is only guidance if the Commissioner has issued it, unless you really want to pick a fight with the Commissioner on something that's really, I guess, worth your while fighting, because the Commissioner is not always, hasn't always considered all situations. So, sometimes it is worthwhile to pick a fight, for want of a better term, if you think you can get the right.
It's definitely not a shortcut.
Yeah. No, not a shortcut. Sorry. Sorry.
All right, thanks for that. We have Fiona has her hand up to ask a question.
Hi, thank you. I have a question which actually isn't got to do with grants and hasn't got to do with fees and charges. I have had dealings with the ATO in the last week, and they've given me conflicting opinions, and that's kind of confused me. We're requiring a property which is purchased for a roundabout, and we're paying the landowner compensation. It's a residential property, and we've had conflicting opinions in regard to the compensation. We've had a yes from the ATO, and I've had a no from the ATO. So that's where.
So pick one, Fiona.
Which one's in your interest? Look, that's not unusual, Fiona, to get conflicting responses from the tax office. Have you been speaking to them, or has this been given to you in writing?
I've spoken to 2 different people, and I've sent an email, but we need to get this. We need to do this purchase in the next week or so. So that's why I was like, oh, I might as well ask this question.
Yeah. So my starting point with something like that would always be looking at what has actually been agreed. So what have you got in writing in terms of that acquisition of that property? A residential property itself is not subject to GST if it's an existing residential property, even when the seller is GST registered. That's because the supplier is what we call input tax. There's no requirement to charge GST. In your case, I'm assuming that it's existing residential premises that have not been built in the last 5 or more years.
No, it's been there for a long time.
Yeah. So there would definitely not be any GST, and I'm assuming you're purchasing from an entity that is not GST registered, or an individual, or
yes, that's correct.
Yeah. So it's just probably someone's family home or someone's home.
Yes, it is. Yes.
Yeah. So in that case, that is outside the scope of the GST, because the vendor is not registered or required to be registered.
Yep.
In terms of the compensation, then, would really want to understand what exactly that's for, but
I think it's just allowed, because we're buying it from him, and it's just kind of give him a bit extra so he could, find another house.
Yeah. So is that I guess above market value?
Yes.
Yeah. So the question would then be, is it really wrapped up in what you're actually buying, or is there a payment there that might be seen to be, say, damages? As a general rule, I wouldn't expect there to be any GST unless there's something in that agreement that's really quite specific.
Okay, great. That's what I got with the person I believe would be right. That's what he said. So thank you.
Well,
Thanks
we've solved one problem today. Has anyone else got any questions? I can't see anything in the chat or any other hands up unless I'm missing something.
Hi, it's Zishan Qureshi from City of Brimbank. I've just got a quick question, not in regards to fees and charges, Katrina.
Yeah.
We've got situations where council is acting as a middle person. The original transaction is between a payer and a recipient. Council is only collecting payments from the payer and passing it on to recipient. You can call council is acting as an agent or as a middle person.
Mm-hmm.
What are the GST implications of for council in such situation?
Yeah, that's a good question. So if you're really if the fees and charges are really those fees and charges of another organisation and not the council, then those fees and charges essentially should not be going through your books, so to speak. They're not your fees and charges. You're just merely a collection agent, I guess. So you don't need to be picking up any GST implications or be considering any GST implications for those, unless you have specific agency arrangements in place that actually make you essentially the supplier in that case. So I guess I would urge you to have a look at what arrangements do you have in place with that other entity that you're saying you're collecting the fees and charges on their behalf.
Yeah, thanks.
Okay, have we got any other questions? We've just about come to the end of our time, but I just speak now.
Or I guess if there are any questions afterwards, happy to take those on a one-on-one basis.
Yep.
And I have got my details on the slide, which I'm not showing right now, but yeah, if yeah, happy to receive any questions, and if you want to sort of have those passed on to me.
Absolutely. So no more questions.
Because I know I've also been talking high level today, but there's so much that could potentially be covered. We just don't have the time.
Yeah, no, thank you, Katerina. That was really informative, and I think it's given us all a little bit of a heart attack that we need to go and check everything.
Don't have a heart attack. I don't want to be responsible for that. But I think, you know, it's important to think GST. I think a lot of the times GST is forgotten, and it's only considered later. And when it is considered later, I guess there's less things that you could do to fix it if there is a problem. Yeah.
Okay. We're going to finish up now, but obviously this recording will be available on YouTube. I think Gab's worked out how to pop it on YouTube, and then we'll send it around so members can access it at a later date, or if you had to jump off or you missed something or you want to check something out. And also I think we'll provide your details, Katerina, if people wanted to get in touch with you directly. We also just wanted to remind everyone that we're running a Tech Q&A online session next Thursday, the 20th of May at 11 a.m. Gab will send around some information about that later today. But thank you all for your time and for coming along and giving up your lunch time. We really appreciate it. Thanks, Chen, for supporting me.
Thanks for sharing, Simone, and thanks, Katerina, for the information. Very informative.
Yeah. And, yeah, everyone enjoy your day.